Good afternoon, dear colleagues. As always, Sandy, as always, Forex Project, and Dan Riffelman is on the line as always. And dear colleagues, I have a small announcement in the upcoming trading week. I will publish the news that we have two new products, namely on the basis of the brokerage company, IFC Investment Management and copying of trades. Dear colleagues, I will write in the upcoming trading two new products in the coming trading week. Come have a look. Well, and as always, I invite you to ForexTimes. Come for training, come for trading signals, come for forecasts. Especially now we have a new type of forecast will appear, namely all PIN-B technique forecasts only without filtering. Come to the community and I will teach you how to filter these trading signals, and these are the signals dash predictions will be published in the private community. Come watch. I think you're gonna a lot of fun for the simple reason that I myself make almost all of my trades. I make almost all my trades based on this trading concept strategy. All right, well, let's take a look today at the likely movement of trading instruments for the coming trading week. And it will be interesting in principle. We will start, as always, with euro dollar, and dear colleagues, to buy the euro. And it would seem that we would like to buy the euro as we have, according to the reports of the Commission. On commodity futures, trading an increase in buyers by 5%. Very directly want to buy. But at the moment, the market structure doesn't allow us to do that. For the simple reason that you know that we're trend followers. The trend is our friend, and a trend is nothing more than a permanent movement and, let's say, alternation of correction impulses. In our case, if we want to buy the upward correction impulse, upward momentum correction to buy. You know what an impulse is? The thing is that in these waves 1, 2, 3, there are no impulses and we don't see any even close to it. Dear colleagues, if we will now consider a little closer to this market structure, we will do it like this market structure. You and I will see that professional participants who are considering their option to buy of this trading instrument have rewritten their expectations downward. And you'll remember that we have large accumulations of option contracts that the professionals of the Czech Commodity Exchange hijacked their futures trades to buy $263 million. 76,400 In general, there are quite large accumulations of expiration of course of the option contracts. It's already past. No? Yeah, maybe even be the way. Spacking and the option contracts too, it's been said more that professionals are very rarely wrong about the levels from that they want to buy from futures contracts to buy. They're just a little bit wrong about the timing. That's all it is, like right here. There were accumulations that worked out, and now there are accumulations that haven't worked out. However, at this moment here, this one, Corey, we are not talking from the current levels, but from the level of the options level, you know. This is the strongest support range, maybe. That's why, dear colleagues, for those who are itching, you can enter into sales right from the opening of the market. However, some options, which Monday, Tuesday, Wednesday, the growth of the trading of the instrument into the range of 50%, 61.8 on the Fibonacci grid. And from here, we can consider selling as option number 1. And the second option, if still from market opening, the price will fly downwards. Therefore, we already start to consider pop, then we start to consider buying. And buying, since we still have an increase in buyers by 5% here, are basically two such plans. So the euro is quite promising trading instrument. And by the way, I think that it's not bad for selling. And I'll write about it in the morning. Despite the fact that we have an increase of buyers by 5%, the probability of a decline is much more likely to go down than up. And I'm going to write this plan. Gold, I'll say probably something even good, namely, dear colleagues, you understand perfectly well what now the growth of gold is based on tensions in the Middle East, and you understand very well that when any big trouble in the world, investors prefer to keep their funds in gold. That's why this momentum is a big, good move. We have to try to correct, and the market tried to do it in a three-wave formation. However, you realize that such an impulse to correct such an impulse with such an appendix, pardon me for using such a word, practically impossible. And most importantly, let's see what structure we're in. Just a second. Yes, what structure is the market in? A three-wave formation we see. Beautiful two T's that this is what it is to suggest that the market has continued upward movement. And since if we had an impulse, then therefore on momentum, the market should continue upward movement. Then this is what it should be, momentum. But you all know what an impulse especially that could be. Of course, the initial diagonal or a classic impulse. But the thing is that neither diagonal nor impulse fits here. Correctional waves carry out overlapping of all maximum values. There is no way that a classic impulse fits. We could try to find here the initial diagonal. However, the initial diagonal is not found for the reason that we have this theoretically fifth wave is the largest, and it actually should be smaller than wave O and wave 3. And it's the biggest. If the fifth wave is the largest, then what we might have is an extended diagonal, right? But in an extended diagonal, wave 2 must be smaller than wave 4. 80, wave 2 is bigger than wave 4. Does not fit here. The impulse does not, it does. And that means, dear colleagues, most likely we are now in corrective structure, namely 1D3. Wave W, a wave X, and most likely we are waiting for wave Y, after which we will buy. So Koto, without a stop loss level in principle, you can expect to reduce your losses. Those who want to enter the market at this moment, I suggest not to use patterns, pin bar patterns for market entry, because still, once again, everything that bad things can happen in the Middle East is on the rise of gold, and therefore them correction, I apologize, momentum. Correction after which we make a decision on selling only in this way and no other way. And by the way, dear colleagues here, I have already today, I looked at it, and we also have divergence. This is very good right here. Very good. The divergence is right here. It's Christmas. It smells like a Christmas tree. And if we take another look at the volumes, the volume is on the growth of the trading instrument are falling. That's also very good. That's an indication that the growth is running out of steam. Therefore, dear colleagues, for the upcoming trading week, we consider the decrease of this trading instrument, Zeki again, as well as on the euro, despite increase by 38%. Yes, there are more buyers. Capitalization of the trading instrument is bigger, but the volumes are falling. The volumes are falling divergence we've been observed. Let's make sure we don't touch the S&P 500 index. We're not going to touch the S&P 500 index, but we're going to talk to you. And we're going to talk to you, and we're going to talk about something like this, that we're going to take a look at the data commodity futures, trading commission futures, because there's a lot interesting. And namely, you and I are assuming that our strategic level for this trading instrument, 31,000, we are going to 31,000. That's what I've been talking about for 6 months now. By the way, I started talking about it here. This is where the price almost reached to our level, and then it started to rise. And I remember very well that for several months in a row, I said, dear colleagues, Everything that grows on this instrument, it is necessary sell exclusively in sell. Well, actually, for 3 months now, we have a decrease. However, let's see what we have decline and why I paid attention to a 4% decrease in sellers. Namely, look carefully. The thing is, it's the wrong time frame. Wait a second. Yeah. The point is that the data from the Commodity Futures Trading Commission futures are calculated based on the data that the Chicago Mercantile Exchange receives Tuesday through Tuesday. Here we see that Tuesday through Tuesday. The market fell, frankly, sincerely, almost non-stop at the end of the day. Monday, it stopped a little bit, which we see the Commodity Futures Trading Commission, the decrease in a falling market. When the market is down and everything good, for some reason, professional sellers prefer to exit the market. Dear colleagues, they know something, definitely know something. That's the second point. The second point is professionals, namely professionals who buy and hijack their futures option contracts, put contracts, don't rewrite their expectations down. The price has broken through the strongest level support, but the professionals are not rewriting their downside expectations, remain still upstairs asking what the hell is going on, what do you know. And now let's take a look. Market structure. Market structure is very interesting. I'm here. I've tried to look at a lot of options, and I have only one option left. The thing is that many of our colleagues prefer to portray this impulsive movement. I absolutely do not mind that here we have an impulse, but not an impulse in the form of 1, 2, 3, 4, 5. For the simple reason that this is not a classical impulse motion, because as wave 4 absorbs the minimum of wave 5, see, wave 4 is higher. The thing is, most likely we have here a diagonal triangle extension. Yes, it's just as marked, by the way. 2, 3, 4, 5, just the principle of it is a little bit different. The point is that in an extended diagonal triangle, wave 1 is smaller than wave 3. That's right, wave 3 should be smaller than wave 5 also. If this is initial attention, initial extended diagonal triangle, then all the waves that are directional wave 1, wave 3, and 5 should predominantly be impulsive rather than corrective. And if we had a terminal triangle, an extended diagonal triangle, then we'd have here, there would be a T right here, there would be 3, and there would be 3, and we would have, look at this, please look at 1, 2, 3, 4, 5, 2, 2, 3, 4, 5, and now 2, 3 is missing 4, 5. And then we're going for a big correction. That's how I like it. And this triangle I like to label with the letter A, correction B, and actually that's how I'm going to depict, we're not done yet most likely. Decline, then correction, and working out 31,000 more than that. Dear colleagues, something I'm so crooked, moreover, dear colleagues, I believe that the price may not stop at 31,000. It can go even lower. Why is the point? Is that if the impulse has a C expanded from the expanding, I beg your pardon, I apologize, diagonal triangle, we have a 5-wave structure. Hence, wave C is the third wave, I assume, that most likely to be, again, a 5-wave that could go all the way down past level 31,000, but where we're going to go will tell us the put option hedges when at the end of the option month after expiration, they rewrite their expectations. That's where they'll rewrite their expectations, like here or here. That's what it's going to be. Our target is the first strategic target, 31,000, and the second target will be where the professionals will point their fingers at us, like here. Well, dear colleagues, what to do for the coming trading week? We expect the formation, the third, I beg your pardon, the fourth, fifth wave, 1, 2, 3, 4, 5 after, which we are considering. Of course, buying and buying will be good enough, deep enough. Well, that's it. Dear colleagues, that's all for today. Quite big, I apologize. Please excuse me one more time. I invite you to Community for Times and next week. Next week, I will publish 2 new products. Not even 2, but 3 new products and pin forecasts. Bars will be published in the closed community Forex Times. You don't have to follow the market at all. But just follow the publications in the community and work exclusively according to clear trading rules. Thank you very much. Dear colleagues, I was Dan Forex Times Project and 2 all bye-bye.